What's up, everyone? It's Karthik with Money Vest. Welcome on board for our market open live stream. Hope you all are doing great on this fine Thursday morning, as we are obviously not getting any of the data that was expected, and worse, the October jobs report are going to be permanently not known in the data economics data here, because they're not going to release them at all. So QQQs are down another 30-40 basis points right now. We got the S&P 500 down about 30 basis points. We got Nvidia stock down a little bit over 1%, with Tesla also pulling back over 1% pre-market, as volatility is back over 18, so it's up almost 3% right now in pre-market trading. So hope you all are doing great. So welcome. And again, coming over to the we also have a lot to discuss with regards to Michael Burry closing down the hedge fund once and for all. And this right here is the BLS website, so we can actually go over, again, coming over to CPI numbers, which were expected to come out today. But again, if you click on this PDF, this is still for September 2025. So we are obviously not getting those numbers right now. So if you come over to Econ Day, scrolling down a little bit for the calendar, these numbers are indeed delayed once again. So we're not getting the jobless claims, we're not getting the CPI numbers, and so it's possible that we might just not get October's CPI as well as the unemployment numbers. CPI we might actually get. It might just be a delayed report. We might get it towards the end of this month. I think that's what I think is going to happen. That we're going to get the CPI numbers, but they're just going to come in a week later, or maybe, at the end of November. Reason being is because that's exactly what happened the last time as well. So if you come over to the homepage of Bureau of Labor Statistics, this right here is the suspension of federal government services. But they did mention that they were going to release the consumer price index numbers because of certain subsidies and certain programs that they have running and dependent on the CPI numbers. And as a result, they were released on October 24th. If you guys remember, it was a couple weeks later in October that the September CPI numbers came out. So the expectations are that, yes, we are still going to get the CPI numbers, but just not today. It's most likely going to be towards the end of this month. But October numbers are certainly not going to be coming out for unemployment. So unemployment is something that we might not get. Back in the day, how the BLS site worked. Yes, back in the day when it actually did work. So once again, good morning, everybody. Vamsi, Mike, Vishwant, Sean, Jay, Milan, everybody, thank you so much for joining. Welcome. And volatility is back higher, 2.5%. We got individual stocks slightly rolling over. Palantir pre-market is also down over 1.6%, about $181. Now, Michael Burry has decided to shut down the entire fund. So this right here was the letter dated October 27th. Dear investors, with a heavy heart, I will liquidate the funds and return capital by the year's end, but for small audit and tax holdback. My estimation of value in security is not now, and has not been for some time, in sync with the markets. So that's what he wrote in his letter, if this is actually indeed correct, because we obviously just got that off of Twitter. There's been circulating around quite a bit. With heartfelt thanks, but also with apologies, I wish you well in your future investments. And then again, providing some information about somebody who can help them with their portfolio needs. But all in all, I mean, not in sync with the markets, unfortunately, is what he wrote. And then also, this right here was something that he posted earlier. So I bought 50,000 of these for $1.84. So that was the puts purchased on both Palantir, and as we already know, that Nvidia is also part of that put positions. And that's $9.2 million worth of puts that he's bought, right? The value attached to these puts is what CNBC was quoting, but this is how much he has spent for that premium, right? So $9.2 million. And each of these will let me sell Palantir at $50 in 2027, right? So obviously when you are selling a put, you have an obligation to buy. And when you are buying a put, of course, you have a right to sell. And that's exactly what it is, right? So if he's buying puts, he has a right to sell at the strike price in within that expiration if it gets breached, and that is $50 for Palantir, and that is going to be a substantial drop, obviously, from its highs of where we are right now. So Palantir right now is about $181. Now, what is unclear is if this position was liquidated, if it was exited out of this position, or if he's still holding on to it. I've been reading a lot on Reddit, on X, that he did something very similar back in 06, 07, 2008. Great financial crisis. He placed his bet. Then, of course, he kind of went away. And then, obviously, it paid off over time. So, but we have been looking at Palantir's options volume as well. There's been a couple larger blips that do suggest Michael Burry's trade activity where he did buy and then he exited out of those positions. But then, of course, $50 is going to be a 70+% collapse for Palantir, which, given the valuation, is something that is a possibility. But how probable is it? Of course, we'll find out over time, right? That's only time will tell us if this is going to play out or not. So that's where we are with the overall reports and the overall data in this market, which is the lack of the data in this market is what's really causing a lot of problems because of the government shutdown. But let's go over some stocks. I know Bitfarms reported their numbers with a massive miss across the board. The stock is in the free fall, down almost 15% right now after a double miss on both revenue and EPS. And the next support or the level to really be watching intraday is going to be closer to 250 for Bitfarms. So that's where we are. But let's go over to some stocks for all of you, and then we'll come back to the market. So analysis on Nebius, Sean. So let's just take a quick look at Nebius Group. Selling off over down 7% yesterday, down another 2.5% right now, pre-market, and it seems to be breaking down from the symmetrical triangle. Next support is going to be down at $87.88. Now, before we even move further, okay, I want to mention a very, very important message, and that is that do not overstay your welcome. In a lot of these momentum, a lot of these AI stocks, and all these names, it is really important to not get caught on the wrong side, because we've seen this over and over again. And as a fellow friend and somebody that is indeed looking out for our community members, I really want to mention valuations, fundamentals matter a lot, right? Long term, they matter a lot. And when the hype starts to die down, a lot of these stocks are going to get crushed, right? That's just how it works. There's consolidation, there's concentration, and the best of the best survive to take advantage of those opportunities and that market share. So I'm not saying that Nebius is one of them that's going to get crushed by all means. There's a lot of these companies, right? So we just have to make sure that fundamentals align well. And if it's supposed to be a trade, treat it like a trade, have stop losses in place and get out. Don't let a 10%, 12% loss turn into a 60, 70, 80% loss, because then that is disastrous. So, manage risk well. That is all I'm going to say. Manage risk really well, because if you hold on to something for too long, then things can get much worse once we start to see that bigger correction. And so, with any kind of artificial intelligence trade, just be mindful of those things and really spend maybe 15, 20 minutes. You don't have to spend weeks trying to understand the business, but 15, 20 minutes, go over to their income statement, balance sheet, cash flow, understand their position, whether the revenues are growing year over year, whether the company's profitable, whether the balance sheet is good. Just have to check a couple different lines: cash line, debt line, total assets, total liabilities, what are their margins like, just simple things to get an idea on whether the company actually has fundamentals or not. Because if the company is operating, the other day, if you're looking at a company that has no revenue, like literally no revenue, just piling up losses after losses, right? So I know in times of easy money, there's a lot of stocks that get hyped up. And the IPO market's heating up as well. I mean, we're seeing a lot of IPOs, and that is usually one of those signs where, okay, there's a lot of easy money going around. Venture capitals are throwing at, ballooning up valuations, and AI stocks are just everything AI is just going crazy, right? So we've seen this before. We've seen how it all plays out. So just a word of caution there. But okay, coming back to Nebius, I would put down the support down here at $87. That would be the level, and this would be turned into a resistance now at 94 $95. From its highs of 140, already down 35%. 37% is going to put us down at $87. And of course, if it does sell off further, we're looking at low to mid 60s for Nebius. So okay, that's where we are. Circle, a buy at these levels, not adding but starting on it. Let's take a quick look. So this one also has been selling off aggressively from its highs of 300. Wow, it's down over 70% in a span of just 4 months since June all the way to where it is now. And again, just another prime example, right? IPO heats up over 400%. There's going to be probably a lot of bag holders in this stock. But looking at the fundamentals, you got revenue, which is pretty decent. Earnings are growing, but I think it really is going to boil down to a valuation play because you've got a market cap that is sitting at almost 20 billion off of earnings, which are about 155 million, right? So if you do some very simple math here, revenues are sitting at about 1.68. So 20 divided by 1.68, we're looking at about 12 times sales, which is after the fact that it's dropped 70%, right? So obviously when it was at 400% higher from where it is right now, so 220%, then the valuation multiple was not 11.9 or not 12. It was closer to 36, right? So price of sales was really, really high back when this was at 280. So 20 divided by the actual earnings as well, 0.155. We're looking at about 129 times earnings. So even after a 70% drop, it's trading at about 129, 130 times earnings right now. And earnings expectations for this, we don't really have much on an annual basis, but quarterly is expected to grow. Same thing for the revenue as well, is expected to grow. And then in terms of the balance sheet, it's got pretty good amount of cash sitting on the balance sheet relative to the debt. And so that is very, very strong. So this is something to keep in mind. It's a stock that has been selling off, but the valuation as it continues to come down will start to become more and more attractive over time. Valuation really is the key there for Circle. Can you look at support and resistance for Oscar? I'm thinking about CSPs if a red day comes in. Any help, please? Let's take a look at Oscar. So I would say a support level is sitting right here at $13.99, closer to $14. So this right here, let me just go over to the weekly. So anything inside this, a green rectangle, so right there, is going to be an area of support for Oscar. Very, very strong area right there. That could be a good CSP strike, whether we're talking $13.50 or $14. It's already, starting to get pretty oversold on the daily. And so that would be a level that I'd be watching as a support there for Oscar. Robinhood, let's take a quick look. So Robinhood on the 4-hour chart, again, continues to consolidate sideways, and it's got a very strong support at 120. So this right here is a level that it continues to validate right there, and a resistance all the way up to 150s for Robinhood, right? So we're seeing a lot of consolidation here in that range. Support level, if it does break down below 120, all the way down to $96, $97 is going to be that next level to watch for Robinhood. So, but for now, we're watching closer to 120 as a support. Hims and Hers. Let's take a look at Hims here. Has been selling off aggressively, now testing that area of support, but doesn't seem like it's going to get a bounce here. Continues to break down further. It's now in the 30s, high 30s. I did sell a covered call on Hims after closing my existing one, and so that is obviously going to print, and that's going to be the idea, is to continue to sell some covered calls, lower the cost basis, and for Hims, next support, next target is going to be all the way down here at $29 to $30. So that is going to be that support level to watch there. Coming over to, let's see, what do we got? APLD and Meta Platforms. Meta has been selling off a little bit as well, down almost 3% yesterday. Coming down to low 600s again. 590 is going to be a level where I'm going to buy and pick up some more shares. I've already got a position going in the options portfolio, and the idea is to continue to accumulate slowly and steadily, get up to about 100 shares, and then start selling some calls. The call premiums are good for Meta. I mean, if you come over to the options chain, and if you look at, covered calls for Meta, let's say a couple weeks out, November 28th, we're looking at the money calls paying $1,600. This was much better, when we had a nice little green day a couple days ago. So this was obviously November 10th when we were trading up to 630s. We can expect as much as $2,000 $2,500 in premiums. So on the next big rally, the idea would be to have accumulated that many shares to then sell a call for Meta on a weekly, bi-weekly basis and collect a couple $1,000s. So even right now, 620, 1165, 622, 1090. And so that is going to be the plan, is to get my cost basis to under 600 ideally. That would be even better for Meta platforms. Right now, what do we got? I know I picked up at 695, and then I picked up again at 630s and 620s. And so right now, I've got around 665 still. So still have a lot of work to do here. Another 80 shares is what I'm going to pick up eventually for Meta. Okay. Would you consider applying the same approach on Meta with Microsoft, considering it's found a solid support? Yes, I think Microsoft also is strong, but the only thing is that Microsoft is not as volatile as Meta, so I doubt the premiums are going to be as great as Meta platforms. I mean, one way to look at them is like, let's say if you go out to November 21st, right? So 8 days out, an at-the-money call is paying you $12.70, right? So what is that going to be in terms of the ROI, right? Return on capital. We're looking at $12.70 divided by 610 for 8 days. That's a 2% yield on cost, right? So if I were to do a buy right today at 610, sell a 1 week out covered call, I'm making 2% in just 8 days. With Microsoft, I doubt it's going to be that high. It could be. Let's just check. November 21st, you're buying at, let's say, 511, and then you're selling the 512 call. Yeah, the premium is half, 640 divided by 512. So you're looking at a 1.25%, which is not bad. It's just that it's about 30% lower, right? For almost an equivalent amount of risk. So sometimes what we also have to identify is, for the same amount of risk, what is the reward we're getting, not just the absolute reward. Because on an absolute reward basis, you can obviously make different decisions, but even if you are getting a similar reward but half the risk, sometimes even that makes sense. So if this was, if Microsoft was at, let's say, closer to 1.75 or 1.8%, yes, you're not getting the Meta type returns, which is 2% or more, but the risk is a lot less with Microsoft because it's a lower volatility, lower beta stock compared to Meta. So then I would have picked Microsoft as a better opportunity. So, that is, the comparable analysis that I think is very, very important as well. But your money will work harder with Meta for sure. The return on collateral is better. And usually with higher beta, higher volatility stocks, it tends to be that way. So, but we're working on something pretty cool, which would be like an options calculator, options pricing calculator, which would help you identify, similar to what we just did, is identifying options which are better than other ones, because we can't just look at it from an absolute return on collateral standpoint, but we also have to consider the volatility, the beta, as well as the delta for that stock. And that's what we're going to be building and trying to help you identify. No, CPI was not released today, Christopher. It was delayed yet again. As far as I know, I had the BLS website open for some time and did not get those numbers. So we can check again, just so it's been a while. I checked at 8:30 a.m. Eastern. I checked again at 8:45. But this is the CPI. And going over to the PDF, next release, it doesn't say anything down here. So you can see the next release was supposed to be November 13th, which is today. But we didn't get anything because this is for September. So October numbers have not yet arrived. So so that's where we are. And then, of course, unemployment numbers are still delayed. That October report, I don't think it's going to come in ever. So we're probably not. We actually haven't received the September numbers either. So I think it's 2 reports. Yeah, it's 2 reports that we haven't received on unemployment. August was the last print. So we didn't get the report for September because that was supposed to come out October 3rd. The government got shut down on the 1st, which is stupid. Like, you've already compiled the numbers. You just have to release it. That's all you have to do. Like, it's not even, the government went into shutdown October 1st. Like, you've already compiled the numbers up until September 30th. All you have to do is just release the numbers 2 days later, even if you are in government shutdown. But We didn't get those, and then October numbers have also not arrived in the first Friday of November. This was earlier this month, and so 2 reports we have just not gotten for unemployment, and then of course for the inflation we are going to be waiting. But inflation numbers I do believe are going to come out at the end of this month. I think they did come out last month as well, and so we're most likely not going to we're most likely going to get those at the end of this month. Yeah, Jay, Michael Burry closing down the fund, returning capital to all the shareholders who've invested with him. This was a letter, apparently. And yeah, so pretty interesting turn of events with Michael Burry there. Is Oracle going to bounce or sell? So I think Oracle's got a pretty strong support at 218. So I would let it come down. I will let the price come to us. This is not a great game of chasing, but it's a game of attraction. That's what that is. You have to let stocks come to you, prices come to you, and this is what's been happening, right? We're just kind of attracting Oracle down to 216, 217. It's going to be a pretty good bear market for the stock. It's going to be down over 36% from all-time highs, right? So I think 216, 217 is going to be a good entry level for Oracle there, and I could see myself, starting a position in that stock as well. For the sake of just kind of accumulating about 100 shares to then sell some covered calls on Oracle as well. I might start with, again, CSP is going to be a bit more expensive, $20,000 roughly, $21,800 roughly at 218. And so I might consider that as well. Or just slowly and steadily dollar cost averaging into it and then selling calls on it. Okay, HIMS we already went over, Meta, Robinhood. Plug Power, let's take a quick look on what Plug is up to. And we've got a lot of consolidation sideways here after a bit of a pullback from its highs of 450s. Sold off a bit over 44%, so consolidating sideways. And I would put down a support sitting right about there at 230s. And then, of course, a resistance all the way up to this level right here at 295, closer to $3 for Plug Power. So BITX instead of Ethereum, because of the dividends, E2 moves a lot more and more potential if Ether goes back to all-time highs. So Gary, yeah, I think it's primarily because of the leverage factor. I mean, I've already got the Bitcoin leveraged BITX, and yes, the dividends are nice, but then I don't want to go another leverage with ETHU. So I do have ETHE as to kind of try to lower the amount of leverage that I bring to the portfolio. BITX, from an options perspective, I'm okay with holding a little bit, whatever I have. 14% dividend obviously is nice, but this has been selling off on the back of crypto, right? So you can see the overall trend, lower highs and lower lows, and same thing for Bitcoin as well. It's been selling off rather aggressively, trading down to these low 100s once again. So that's where we are here. Used to unplug at 32 in 2020. Good thing that I exited. Wow, that's crazy. APLD, let me just go over that very quickly before BG starts typing in all caps with 5 exclamation points. All right, so APLD down about 7.5 yesterday, down another 4.6 pre-market. We are in an uptrend still, but it feels like it's starting to break down from this higher high and higher low pattern. And a couple times we kind of had this blow the top off rally. Still trading above the 50 EMA up until now. So now starting to break down below this level. And I would put down the next support down at $20. I think $20, $21 is going to be that next support for Applied Digital. And again, losses racking up, margins compression. Revenue is growing, but it's really profitability that is struggling right now. So support level is going to stay put at $20, $21. Okay, so let's see. Looks like we have a request for DUOL, so APLDB covered, VST and NEO. NEO is NEO, the days of NEO. So we're talking about a support down back at 560s. There's actually a brand new NEO showroom. I was literally driving by here in Dubai. I saw the symbol and I was like, no way. there's a massive showroom that just opened for NEO here in Dubai. So let me see if I can bring that up if it's available. There we go. So that's right there, NEO Hub Dubai. It's right here in Sheikh Zayed Road. And I was driving past it. I was like, that's crazy that they've opened this huge space for NEO. I might actually go in at some point. Just go check it out, see what kind of offers they have going on. Rates are really low in Dubai. To be honest, like owning a car is not that difficult like here, because the rates are very attractive payment plans and stuff as well. Full services, full insurance, everything included. Like it's crazy. So yeah, I mean, pretty strong reviews, 4.6. So that's good. But yeah, I mean, profitability is still struggling. I mean, as soon as this company becomes profitable, I think it can really turn things around. I think that's going to come from a concentrated approach, not from all the distraction from all over different vehicles and products and different things that they're offering. But for NEO, I would say support level right now is going to stay put right about here, exactly where it's trading at the moment, roughly around 630s, 640s, and a resistance all the way up to 788, 790 for NEO. So those are going to be some levels. Okay, yes, we already covered. NEO makes my eye twitch. Let's go over to DUOL. So this one also has been just in a complete bloodbath here, falling knife, and the next support 173. So that's going to be the level to watch for this stock here. It started to break down from this head and shoulders, right? So head and shoulders pattern starting to break down aggressively. So ELF, let's take a look very quickly before we come back to the markets here with 15 minutes to go. But ELF Beauty also selling off. Support level is going to stay put down here at close to 49, close to $50. That's going to be that support with a resistance all the way up to $95, $96 for ELF Beauty. All the way up to as much as 142, 143. So that's where we are on the technicals. Fundamentals are still strong. Revenues are growing. However, profitability taking a bit of a hit with the margins coming down. And so right now support $67, $68. So here we go again. I mean, markets are, can't seem to make up their mind. I mean, it's been a very undecided past few weeks. Of course, last week was red for the S&P 500. Pretty significantly red. I mean, it was down over 1.6% to start things off in November. So far, we're seeing a nice little recovery, 1.8% higher. But that, of course, can change. We still have two, full trading days left with little to no data for the markets to dissect. NASDAQ is up 1.7% this week. It was down over 3% last week. And I think they're still down in the month of November. Let's check. Let's come over to SPY seasonality. And we might be slightly up, slightly green, or slightly down. Could be even flat. So we are, flat basically. 16 basis points up for November. But we're still positive. Still 7th month in a row. We are positive for the S&P 500. So, okay, coming back to the markets here. Let me just go over Navitas as well. I know a lot of people were asking questions about NVTS. And looking at the daily, looks like we've come down to that support again, roughly around the $7.75, $8 range. And so if it continues to sell off, that would be that support. It is incredibly oversold, so there is a possibility of a nice little swing trade if it validates this support level right here. So we can see a nice little recovery back up to, however higher, like whatever price the volume takes us. But right now we've got a little bit of resistance here in the 970s. Support level $7.75, $8 for Navitas. So coming back over, volatility is creeping up 3.8% higher, 18, back over 18 right now. And crude oil is sitting at just under $59 a barrel. So how cash ready is everybody right now? I really want to poll this. How cash ready are you right now at this moment? If volatility were to spike tomorrow to, let's say, 50 or 60, how cash ready are you at the moment? 0 to 5% cash, 5 to 10% cash. We'll do 10 to 20%. And then we'll do 20 to 100% cash. We'll just do 20 to 50%. Or let's just do 0 to 10 because I also want to, extend a little bit of those. So 10 to 20, then we'll do 20 to 40%, or let's do 50%, and then over 50% cash ready. All right, let's do this. Let's see where everyone is, how cash ready everyone is right now in this market. If volatility were to spike tomorrow, how much cash can you put together to take advantage of those opportunities? 0 to 10. Yeah, 0 to 10 I think is also, I think it would be a lot of people actually. I think majority might be 0 to 10%. 17%, oh my God. 17% of people are sitting at over 50% cash right now. Half is cash. In times of distress, in times of, real panic, cash is pure king. It's pure king. It's liquidity. It's what you can do with that liquidity is insane because over the last couple of years have done a lot of distress deals. And I've mostly been on the cash side. And it's incredible how creative you can be when you actually have the cash to do it. So that's why, Warren Buffett always in a very, very heavy cash position is he always has power. He always has control over the situation. I mean, things that he can do, deals that he can strike, terms that he can demand is just incredible. It's incredible. So during times of distress, crisis, panic, any kind of those situations, cash really does stand out a lot. Praveen says, most of my cash is sitting in CSP. Some may get assigned this week. 17% plus 200K margin. We don't want to go there. This is not margin that we're including for. If you were including for margin, I'm sure everybody's like over 50% cash right now. But this is just pure cash equity that you can come up with if you wanted to buy stock. So 39% as expected. Most people sitting between 0 and 10%. Only 23% are 10 to 20. 20% are 20 to 50. And we still have 17% that are sitting at over 50% cash. That's incredible. You, my friends, have a lot of leverage, on the next big VIX spike here. A lot of leverage. We need VIX to hit 30 plus. Yeah, we got up to as much as 22, right? Just a couple Fridays ago. Every Friday seems to be a good opportunity. Most Fridays we have seen volatility spikes. Friday, October 17th, and Friday, November 7th. Most Fridays have just been big spikes of volatility. So yeah, if volatility gets up to 29.30, I think that's clearly a buy signal for sure. And then anything above that is just shopping season. It's Christmas. So cash is gold. My cash was used to buy gold. Yeah, gold, silver recovering really well. If you come take a look at silver, what a monstrous recovery silver is having, right? It's back up to all-time highs almost at $54 per ounce. Gold is taking a little bit longer, but has also pushed right back up to over $4,200 per ounce right now. So, okay, that's pretty good. We have 62% of people sitting between 0 and 20%, and then 38% have 20% or more. 16% have 50% or more. So, does margin count as cash? No. Margin counts as margin. Margin counts as loan, debt, leverage. Other words for that. So, but yeah, this is a pretty good breakdown. I think a lot of people are prepared. If you kind of like 37% obviously is 0 to 10%, but 46 and we're talking 60. Yeah, I think 63%. 63% of people are between at least 10% cash, which is a very, very good defensive prepared situation. That's good to see. 2/3 of investors. Yeah, how can you account margin as cash? That's not cash. If anything, that's worse. It's gonna put you more in a non-controllable, non-powerful position, right? Because if somebody is buying cash in a distressed deal, they're buying so because someone else on the other side of the trade is getting forced to liquidate it, right? The bank is calling up, or they can't make those payments, or whatever it is. They obviously they can't bring up the equity, and as a result, they're selling a very good asset at a discounted distressed price. So it makes actually a situation worse. So, the best time to use the margin is when the risk reward is so attractive. When we're at such rock bottom prices that you just can't pass up on that. But a lot of people use margin at the very top. They're like, okay, markets are moving higher. They're going to keep going higher. Let me just buy more. If you don't pay back the margin, it's cash. Yeah, I mean, you could technically just take margin out into your bank account. You can do a transfer. It would be considered, of course, as a loan. But hey, then just close the app, right? Just delete the app, never look back, liquidate, and then you're good. You see that on Reddit all the time. Like, people just show their losses, and then in the comments, people are like, just delete the app. Just delete the app as if it's just going to go away. It's going to vanish. Always reminds me of Michael Scott from The Office. He just needs to declare bankruptcy, and that's it. It's done. So, Deval, how about investing in residential real estate in the current situation? Depends very much on what market you're looking at. Because there are opportunities in certain markets, and then certain markets I would tell you to just not touch for real estate at all. But it just depends, what is the objective and what markets you are most interested in. So, and then depends if you are, a cash buyer, mortgage buyer, all those things obviously do matter as well. Yeah, my number one rule is to stay away from margin. I agree. I think that's also very, very important to keep in mind. That brings you a level of peace that nothing else can. I know margin, leverage in general allows you to scale really fast. It allows you to, do a lot of acquisitions and, of course, pick up more assets, but then it also brings a lot of risk mitigation and risk management along the way. So what I like to keep track of is my debt to equity ratio personally, is how much debt I have versus how much equity I have. And if that number is at a reasonably low level, which in my case, a reasonably low level is like 2 to 3%, then I'm very comfortable. The moment it crosses over 10% is when I start to get like, okay, maybe I'm over leveraging myself a little bit. And that's just a very conservative approach of mine. I know some people have like a 40%, 50% debt to equity. And again, it comes down to personal preference. But for me, margin has never been something that I've used, right? In trading and investing, whether that's for buying stocks or whatever, it's just not, because you're giving up control. That's what you're doing, right? When you take on margin, you really are giving up control of your own asset, and you don't want to give up control, right? So if SMH comes down 2%, I'm losing my house. Yeah, you never wanna be in that situation. So anyway, so market's about to open in a couple minutes here. In Germany, yeah, I mean, I haven't looked at specifics of the Germany real estate market, but I'm sure there is definitely opportunities for short-term rentals, long-term rentals, and again, area by area, smaller zip codes. I would start with the demand supply analysis, and then of course run the numbers, underwrite the deals. We have a nice little calculator in our Discord to understand what the ROI is going to look like if you are looking into real estate. So we have that for US, we have that for Dubai, and I'm sure the same concepts do apply to Europe, just in a different way. But the numbers are the numbers, right? The math is always going to be mathing. So, okay, seeing a little bit of a pullback pre-market. So QQQs are indeed down about 0.5%. We got SPY down 38 basis points. We got NVIDIA down about 1.5%. Tesla 1.6%. Coming over to some other stocks, SoFi, brand new all-time high yesterday. Congratulations to everybody getting up to over $32. It was up 4%. Very nice move. It's down about 1.5% pre-market right now. Palantir down about 2.2%. Continues to sell off. Now under $180. If it does sell below 170, the next support is going to be down about 160s, all the way down to in the 140s for Palantir. So those are some other things to also look at. As a learning community, I would encourage questions with answers. What do you think would help others see your thought process? Try to put the ego aside. Yeah, absolutely. I mean, we're doing a lot of Q&As every day, Lamp. So you're more than happy to ask any questions you want, and I'm more than happy to answer any questions you have. So, but we're doing Q&As almost every day during these live streams, and I want to go over as many stocks for all of you as possible and make it obviously valuable for everyone. So, hopefully closing my CSPs, waiting till after NVIDIA earnings next week. Yeah, so let me know what strike you're selling them for, and then maybe I can take a look at it. If I wanted to close my CSPs early, would I buy to close? Yes, that would be buy to close. You can simply buy to close your CSPs, right? So buy to close is for closing those puts. Sell to open would be for new ones. What do I think about Figma? I feel like it has tumbled a lot. I think, again, it comes down to valuation, right? So Figma, when it IPO'd at 142. It was really, really high. We looked into it. I think I did a video as well. But from 142, it's dropped over 70%. Again, couple IPOs that have come out. They've come out at really, really high prices. And this is one of the early signs of the markets really heating up because there's easy money going around, right? So at the end of the day, like, unfortunately, investors who are buying at the IPO are the ones losing quite a bit of money, right? 70% down, 21 billion. And so, again, the numbers are right there, right? So that's what we have to analyze. And so right now, it's not a profitable, company at the moment. Yeah, I'm confused by the ego aside comment. I know. I don't know why Lamp or whoever that is said that. Because we're literally helping each other every day and there's no ego at all. I mean, if anything, I know everyone's starting at some point. We all started somewhere. We were all beginners at once, so we understand everyone's journey very, very well, and so we're here to help as many people as possible. So, yeah. Anyway, so coming back to the markets, we are open and live. QQQ's down about 0.5%. We got SPY down 45 basis points as well. We'll see if the buyers indeed step in. Monday, Tuesday, pretty strong couple days in the beginning. Again, data is delayed. No economic data coming out for unemployment or CPI, so no inflation numbers came out today. But nonetheless, we are seeing volatility slightly higher, up over 3.4. Individual stocks are pulling back right now as well. So thank you so much for joining, everyone. Have a great, fantastic Thursday. We'll see you all again for tomorrow's Market Open live stream. And again, link's going to be down below if you're interested in joining our community. As always, happy investing. I'll see you all in the next live.